So let's get started with a little bit of a recent example here from Munich, which was pretty much the greatest city ever. Hi YouTube, how's it going? So there has been something happening, but early this year. So that's the share price, 2019, first couple of days. If you were a shareholder, if you were an investor, well, things were looking bright and easy. 2019 couldn't start any better. And then the Financial Times comes up. And Financial Times published 2 articles about alleged fraudulent activities in the Southeast Asian operations of the bank. Now, alleged, so I'm just retelling what they said. But this, again, this was enough to cause that. So we see a dramatic drop in the asset price of Wirecard. After the first article we had 14%, after the second article we had 29%. So about like 40% gone into this. So this is a bad thing, and that's precisely what the German regulator thought as well. And they banned short selling on it, because they were a bit concerned about retail investors getting left behind and the overall efficiency of the market. So if you're not in finance, short selling means that you really think that you want to sell something, so you actually borrow it to sell it. So you can buy it back later when it's really cheap. So that's how short selling works. And that's what people did. So if you talk about efficiency, we might just want to now put on our financial theory goggles. You know, sometimes it's good to have a PhD. Don't try this at home, but in theory, this is what we saw with Wirecard. Is basically what we should be expecting if everything's working well. But simply speaking, if I'm an investor in Wirecard and I read about, okay, there might be fraud happening, this is relevant information if I get this from a publicly available information, so no insider trading. So I will react, or I will be very likely do some kind of reaction, which would be in market terms, buy or sell a share. What we've seen there is basically so this is how the share price looked like without any colors. And this is what we see. So everything was happening, nothing was happening during normal days. We've got new information, investors responded by more selling than buying, causing drops. And then back to normal when, nothing happened. There's obviously a story following on to that, but let's just focus on those 2 things there, those 2 information.